Thank you for watching the CEO Barbecue. My name is Antonio, and today I'm going to be in multiple places at the same time. Unfortunately, no beach vacations. Pretty much the opposite of beach vacations here. So we're going to Alaska, we're going to the Yukon, and we're going to BC. Joining me on the barbecue today is Gary Thompson, the CEO of Silver47 Exploration Corp. Before we get into the actual interview, though, I'd like to warn you that we have received monetary compensation for the production of this video from the company that's being interviewed. Please understand that this channel is a business that sells content producing services to companies, which means you cannot rely on this video for research, and you should treat this as an advertisement instead. Research is conducted by reading the company's official filings, which you can find on setterplus.ca. Please only watch this if you know what you're doing. This interview is intended only for experienced junior mining speculators because mineral exploration, development, and mining is a very tough business where failure is the norm. This is going to be a conversation that is general and impersonal in nature, containing forward-looking statements. I am not a licensed financial advisor, so before continuing on, please talk to an investment advisor with a good long-term track record because your capital is at risk, and I am neither a licensed financial advisor nor do I have a good long-term track record. If you're not 100% sure you understand 100% of the disclaimers I just showed you and told you about, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said therein. That all said, Silver47 is listed as AGA, or more slowly AGA, on the TSX Ventures Exchange, where over the last 3 months, an average of about 130,000 shares have traded daily. The stock's 52-week high is 84 cents, and its 52-week low is 46.5 cents. With a market cap of 33.5 million Canadian dollars and 50 million shares outstanding today, this is a 67-cent stock with a 50 and a 200-day moving averages at respectively, and I'm rounding up, 58 and 59 cents. There are 10.2 million warrants outstanding with an average exercise price at 92 cents, and there are also 4 million options and RSUs combined at respectively 51 and 75 cents, bringing the number of fully diluted shares to almost 65 million, meaning an increase of about 28% in shares outstanding can be expected if all dilutive securities get exercised, which would then also result in about a 22% ownership dilution if, and that's always a big if, but if those actually get exercised. I do want to caution everyone that by the time you're watching or listening to this, those numbers are going to be different because Silver47 just closed a third tranche of a financing, as well as upsized that financing to $11 million, which is, by the way, the second time they're upsizing it. Initially, they were going for a $3 million financing, so hopefully this will be a part of the discussion later on. But for now, it's important to know that the share structure will soon change with the addition of over 20 million shares and over 10 million warrants at respectively 50 and 75 cents, which will, of course, change the number of fully diluted shares as well as the number of shares outstanding. Keep that in mind as I'm going through the financials as well, because the effective date on the last officially filed financial statement is October 31st of last year, and the company had recorded just under $2 million in current assets, most of which at the time was recorded as prepaid expenses for about $1.1 million, whereas the cash and cash equivalents sat at about $740,000. And there's also some tax and account receivables on top of that as well. On the other side of the October balance sheet, I see no long-term debt, but I do see about $1 million on the current liabilities side, split in about a 2/3 share-based payment liabilities and 1/3 account payables. Again, this is a public company, though, so they do have a burn rate, and these numbers are almost a half a year old at this point, which means this money that I was talking about is likely largely spent by now. But again, they just raised $8 million and are potentially raising 3 more as we speak. Talking about a burn rate for the 3 months that ended on October 31st, Silver47 recorded about $1.5 million in operating expenses which included about a $300,000 share-based compensation. So that's a non-cash expense, leaving us with about $1.2 million in total out-of-pocket operating expenses, where about 23% of that spent was on general and administrative expenses. And so call it 77% or so went toward exploration expenses. Diving further into these two, the largest chunk of the G&A was represented by consulting and management fees, which together accounted for about 63% of the overall G&A spend, whereas marketing was about 15% of that spend, for a total of a little over $40,000. As to the exploration expense, the $911,000, about 80% of that money went toward outsourced drilling and exploration expenses. And as always, I've got two ratios for you here, with the first one being the exploration to administration ratio, which sat at about 3.2, meaning over 3 times as much money went toward exploration as what was needed to keep the lights on. And then next to that, I've got the drilling to marketing ratio, which sat at 18, meaning 18 times as much money was spent on drilling and exploration as what was spent on promoting the company. As always, though, please understand that these numbers represent just 1 quarter, about 6 months ago from now. And also, I'm not infallible, though, so I might be making mistakes in my reading and or interpretation of these numbers. And to stay safe, or stay on the safe side at least, please use setterplus.ca to make sure you're getting the full picture. For Silver47, that full picture is split between multiple projects, 3 projects, really, 3 jurisdictions, as I mentioned at the beginning, which we'll hopefully be able to talk about in this conversation more in depth. But in a nutshell, the flagship project here is called Red Mountain, and it's located in Alaska. This, as are all 3, by the way, is a polymetallic exploration opportunity where the company hopes to find more silver, zinc, lead, copper, and gold. There's also a small inferred MRE on this property, which translated to silver equivalent, although again, it is polymetallic. But if you did translate it to AgEq, that would end up sitting at around 15.5 million ounces of silver, which is about 1 million tons of zinc in zinc equivalent terms. This is a SEDEX and a VMS target, just like the other 2. So just like the Adams Plateau project that they have in BC, British Columbia, where they're also after zinc, lead, silver, copper, and gold, with some historic data on it, which Silver47 is using in combination with geophysics and geochem, and to come up with targets here. And then lastly, over in what I would call north central Yukon, they hold the Michelle project. It's another SEDEX type target, which is currently awaiting a drill permit. And the project is currently under judicial review, which will hopefully get an update on later on in the conversation. However, for that conversation to finally begin, it might be a good idea for me to shut up and Gary, let you do the talking here. But first of all, thank you for sitting down with me today.
Yeah, you're welcome, and appreciate you having me on.
Pleasure is all mine, of course. And although this isn't your first time on the CEO Barbecue, it is Silver47's first time on it. So we'll have to take it all the way from the top. Who are you, and why do you think you're the right man for the job?
Well, I'm a geologist by training, and I think if I could toot my own horn, is one thing that I'm good at is identifying attractive exploration mining opportunities. So being able to recognize a project that has merit that maybe others have missed, or perhaps in the right place at the right time, and picking these things up. So being able to get good projects at a reasonable cost, I think that's the value add that I bring.
Have you or your team members worked in similar geologies in similar parts of the world before?
Yeah, I have spent a fair amount of time in both Alaska, Yukon, British Columbia. Most of my experiences is in northwestern North America, and as others as well. Yeah, I mean, as a geologist, you tend to get experience in different geological environments. So I would say, yeah, we're up the curve on these. I haven't developed or advanced the VMS per se prospect myself, but I quite like it, and I find it quite intriguing that Silver47 has 3 projects that have a lot of similarities to them, but different jurisdictions.
Hmm. Have you been part of a transaction before in your career where you've sold a company, or essentially what I'm looking for here is, have you made money for investors before?
Yeah, so my first public company, and it goes back to 2006, was a geothermal power development company that I founded and built up from 2006, and we sold in 2010. So that was a win for shareholders. That was largely a U.S. It was Western Canada and U.S. Geothermal power development assets, and that company was sold and acquired by a competitor in 2010. So Silver47 would be my number 4 company, public company. Obviously, I'm co-founder of Brixton Metals, and been working on that since 2010. Um, and more recently involved with the company which was called Gold 79 Mines, which is a Southwest U.S. gold explorer, and recently completed a merger with Bullet um, to become now West Point Gold. So that transaction was quite successful for shareholders, and I think there's a lot of upside in that. I'm no longer involved with the company other than a large shareholder,
Mhm.
but it looks like it's doing quite well. It's well on their way and unlocking shareholder value there. So was involved with that for a number of years.
So, but the only two things you're really involved with right now actively is Brixton, Silver47, or is there something else in there as well?
Yeah, that's correct. Yeah.
Okay. How do you split your time between running the two companies?
Well, that's exactly it. Splitting my time.
50-50?
It's a challenge for sure, but managing and looking to bring in some additional help on both companies to perhaps ease my burden a little bit. So kind of working on that.
And that's something we'll hopefully talk about when it comes down to talking about the money, G&A, and spending and stuff like that. What's the insider ownership here on Silver47? How much of that is you personally?
Yeah, I think management is around, and I was just looking at that because obviously with the current financing, the numbers are changing. I think management's around 17%,
Okay.
and I'm probably in that 15% range.
Or is management putting, or is management putting money into this financing?
Yeah, I think collectively, I want to say close to $400,000 in this I guess now potentially $11 million financing.
Right. Again, something we'll touch upon later on in the conversation. What did you get founder shares for Silver47, or what's the average price you've paid per share for the ones you hold right now?
Haven't looked at the average. Yeah, certainly have a large block of founder shares, but also bought some in the market in this sort of 50 to 60 cent range, and participated a couple $100,000 in the 50-cent round.
Hmm.
So still have a pretty low cost base, but my founder shares are obviously long escrowed, and I'm not the kind of guy that's going to sell his shares. I'm gonna sell once at the end when there's a big win for shareholders.
Right. What I'm really looking for here is how aligned would you and I be if I bought stock today at what is it, the beginning 67 cents. So that's really where that question comes from. Options, out of the options in RSU, you probably own a part of that as well. And that's, I would assume, part of your compensation package. Is that right?
Yeah. Um, yeah, for sure. There's options there, options and RSUs. Yeah, I haven't exercised any of those yet, and I think options are an incentive for people, and I would say that I am aligned with shareholders, and I will continue to participate in financings going forward, and again, my motivation is to make shareholders money. So, um, I'm here to sell at some point. Like everybody wants to make money on these things at some point, but I'm a long hold shareholder. And see the potential for much higher prices than we are right now.
The strategy as to how you're going to get there is also going to be part of the conversation as we move on forward. So that'll get interesting as well. I know you also invest in other companies. How big of a position is Silver47 in your portfolio right now?
Well, it's certainly one of the largest in my portfolio. I'm not really counting the escrow shares because they're all locked up anyways. But if you look at the overall block, yeah, it's pretty meaningful position to other positions and other investments that I have. I would say probably right now, probably one of the largest.
Okay. And you're at you said you've been buying shares in the open market. I can also see it here on the SEDI filings recently. Do you plan to be buying any more? Because you're buying in the open market, you're putting money in the financing as well. Do you plan to be on the bid in 2025?
For sure. I mean, I'm always looking for those opportunities. I think part of the challenge as an insider is what is considered, material information, and if there's something pending, it's, I guess there's short windows of when I'm clear to purchase in the open market and transact. So, sometimes it's better, yeah, you just have to, we're a little bit more sensitive to buying and trading as an insider of the company. So, and the thing of it is, if you're always looking at opportunities, there's always a gray area on that. So we just need to be careful on the timing of that. But certainly having taken down a good sized position in this financing, I can't say when I'll trade, but certainly open to increasing my position in this company as I move forward.
Do you or any of the board members have other incentives in place as well? Like, for example, a royalty that you personally own on any of the projects?
No, I would say it's pretty clean from a conflict perspective. The incentives that we provide to insiders and employees and management is the stock options. So stock options are usually granted at or above market, and they're not worth anything unless the shares go up. So that's the incentive for all of us to help move this story forward and get that share appreciation.
Do you know that from off the top of your head, what part of the compensation is going to be options versus what part of the compensation is just going to be a cash comp?
Um, I mean, I don't really look at it that way, but I guess, um, yeah, I mean, my view is a little different on the options. I mean, they're worthless options unless the shares go up.
Mm-hmm.
So, I know that the Black-Scholes has this mechanism that gives some value to them, and if you look at our information circular, there's a Black-Scholes calculation on stock option compensation. But I can tell you how much they're worth. Big fat zero until they're worth something, and that means that the share price has to go up from the grant. So I have a different opinion than the Black-Scholes model. I think it's bunk, and I think that the options are there to incentivize people. And again, they're not worth anything until the shares go up. And um, like a lot of shareholders in this space that are looking to invest in junior mining, you're not looking to make a 10% interest. You're looking to make a 10 bagger on your investment or more. So I think keep that in focus here is we're looking to make a big win here for shareholders. And being shareholders ourselves, we also want to see a big win here.
Well, let's talk about how you plan on achieving that more specifically. And this about does it for what I call my initial vehicle and smell test. Vehicle and management smell test is what I call it before we get into the actual barbecue. But let's talk about the assets that you have here. Maybe just generally, broadly, you have three assets. So the number of assets attracted my attention as well. Why? What's the strategy? What's the business plan? What do you want to do with these three assets?
Yeah, so when we started this company, founded this company in 21, if you back up, you remember in February of 21, we had the initial silver squeeze daylight, and there was a bit of an excitement around silver, and it kind of put the spotlight on silver and silver opportunities. So that's kind of how we started as a company, and going through my network of opportunities. We landed on the Michelle project in the Yukon. So if you look at what makes a good project, so in a good jurisdiction, a large scale land package, what irks me is these postage stamp projects that don't have any room to grow, they're boxed in. That's not, in my view, an opportunity. So getting a large land position, wholly owned in a stable jurisdiction that has 10 or 20 identified targets already, that has some drilling on it. So we managed to strike a deal with Silver Range that held the project for all stock. They got 5.6 million shares at the time when we struck the deal, which was around 50 cent issue price for 100% of the assets. So clean, no cash, all stock. That was a project that we acquired, and we were still private then. And we got really lucky in our first round of drilling. We raised some capital. If you look at our capital structure, I think initially, I'm just going to go to that page so I can quote the numbers right. We raised 1.4 million at 50 cents. And then an additional 3 million at 75 cents in 21 and 22. So those funds were largely driven on the Michelle project. And we got, like I say, we got really lucky and drilled a bonanza silver lead zinc hole on a brand new discovery on the project. So this silver was a silver focused asset, silver lead zinc SEDEX, and it turns out to be more like a Mississippi Valley type, which is just more of just a sediment hosted type deposit. We drilled something like 900 gram silver over 15 meters, including about 30% lead zinc. So that was pretty significant. And that was really the beginnings of Silver47. And we're now moving forward into our listing process. And with that, we filed for a Class 3 permit, and which, of course, now we're a few years later, we're still waiting for that Class 3 permit. But and that sort of was the pivot for us. I mean, we had conditional approval to start trading, and we decided that we should look for other assets, given with the delays we're seeing on the permit. So then we shifted into British Columbia, where I was introduced to this project called Adams Plateau. And interestingly, it was a little postage stamp claim that we got introduced to, but the area was largely open. And the reason we got interested into that is because this prospector showed me a rock sample that had that ran like 4,000 grams per ton silver, so four kilos of silver. And when I looked at the sample, it reminded me a lot of the Samatosum mine, which produced at just about a kilo per ton silver equivalent. And I did a mine tour there in the 80s. And I just remember this, there was like a 5 meter wide, a massive sulfide vein that they were mining. And this sample, this prospector showed me, I said, that looks a lot like the Samatosum ore. Where did you get that? So then we did the tour up there and looked at it. And I was impressed by the lots of road access in there, but I was impressed by the amount of sulfide boulders that were floating around all over the place. You could pull over to the side of the road and chip away at the rock sticking out of the ground. So lots of showings, and remarkably, it was a lot of open ground. So when we struck the deal with the prospector on his little claim there that had some pretty impressive grades, we staked up a big block, and so we have this big block there now. It's another district scale play, a little bit different than perhaps the Michelle was, but no less potential. And so what we like about that is, again, we have surface mineralization for quite a large area. And because of that, we've been challenged by the coverage. So this year we're actually planning on doing some additional geochem work to fill in. There's a bunch of work that was done sort of like little grids, if you will, on a big block. So now it's filling in the holes of that, trying to get to a point where we're ready to drill it. And there was some pretty encouraging historical drilling there as well, and some old small scale mining that was done on that. So that's still quite an interesting project, and we're just in the process of planning for a season this year. So we don't have a budget for the Yukon. So the Michelle is parked, and we can talk more about that if you like. But until we get the permit for that, we're not planning to do much work there. So we're doing a little bit of work in British Columbia just to get that Adams Plateau project drill ready. We're not quite there yet, but perhaps by 26, that'll be we'll have a couple of maybe drill targets ready to go for that. Now by the way, we are looking to. So we're trying to be dynamic as a company, and you asked about how do we unlock that value? Well, again, picking up attractive assets at a reasonably low cost. So we've done that with Michelle. We've done that with Adams Plateau. Our all-in costs for Adams Plateau is like a couple $100,000. So talk about putting together a large land position for relatively cheap. We've done that. Of course, we have to do the work to get it to a point where we need to drill it. We're not quite there yet, so it's still early days. But this would be a property of merit, perhaps something that we would consider farming out to someone that either wants to go public or is looking for an attractive asset in a safe jurisdiction. So we're not sort of, I guess we're trying to be a little bit more flexible on how we think about unlocking value. If you could pick something up for relatively cheap, do a bit of work on it, and then farm it out for a win. A win is a win, and however you can manifest that, I think that's an attractive to shareholders. So either we'll advance it ourselves, which is kind of what we're doing, or to a point where perhaps somebody else will take it on. So that's sort of how it evolved. We started in the Yukon, then we shifted into British Columbia just because we got introduced to an attractive low-cost opportunity. Now we've made that into what looks like quite a decent-sized project. And then we basically got introduced to the Red Mountain project, and that brings us to about 2023. And this was interesting because the Red Mountain project had a pretty substantial resource. It was operated and owned by an Australian company called White Rock Minerals that effectively, I mean, at the time, I think it was 270 million silver equivalent ounces on the books
That's
under
Jork.
a JORC
Okay.
resource. So the JORC versus the 43101, it's a little bit different parameters and requirements that go into that. So that was attractive. It had a meaningful resource that was current, and the company that owned it was in financial stress. Effectively, the White Rock was on the verge of bankruptcy, and they needed cash. They needed cash bad, and fortunate for us that we I think at the time had about 2 million in cash, and we were still private at the time. So we used our current offering that we had. Our last offering in 22 was a 75 cents. So we used our paper. We paid $7.5 million in paper, so 10 million shares. And it was an interesting negotiation because they wanted millions, and we said we'll give them 100 grand, and we ended up settling at 400,000 US cash and 10 million shares of Silver47. So we acquired that for 100% ownership on what now is of course is our flagship now, because it's up the curve. And I use the analog. Well, if you look back at Michelle versus Adams Plateau, we're 5 years and $35 million ahead of the curve on Red Mountain versus these other projects. Not to discount the opportunity there, but we're just further along on that development curve where we have a substantial resource that we now is our base case that we plan to grow. And we can talk about some of the specifics, how we plan to grow that and unlock value. But I think that's the opportunity that we see. We've got these other assets, I think, that we'll get some value for at some point, but now we've got this more advanced stage project that we can move along the development curve. Yeah, we're just further along the curve, so it's exciting to actually look at a project like Red Mountain that has the potential to get in. I call it sort of a near-term development opportunity. We can talk about why that is and what we think it takes to get there.
I definitely want to talk about why that is and what you think it's going to take you to get there, and how much money you're spending on it and everything. But just to one of your first points that you made there, going public, why go public in the first place? I mean, you were financing this thing privately already. You were drilling some nice holes that you liked. You could have stayed private. Why did you go public?
Yeah, that's a good question. And number one reason why people go public is access to capital. So while we had raised substantial dollars privately, something in the tune of $5 million we raised privately, but we're kind of getting to the end of that network of private money that, I mean, even the shareholders that invested because that we were going to go public at some point. So you can only, I think, unless you've got, a really deep network of capital that really is encouraging you to stay private, While we didn't have necessarily pressure to go public, I think just the access to capital, we found that last, by the way, we raised in 2024 in our sort of last private round, we raised $5 million at 80 cents.
Mm.
Of course, we're currently trading at 67, you said, and we went public at 80 cents. So that was a tough nut. And I remember marketing Silver47 in Europe, post PDAC in I guess that was early 2024. And the silver market, it was pretty challenging. I felt like, people were, chewing me a new one that the whole market doldrums was my fault. And it wasn't until April of 2024 we actually saw that move in silver prices. Then our financing became a little easier, and we were able to secure Eric Sprott as a substantial shareholder, and so that kind of helped launch the rest of that financing and really get us listed. So look, if I had the choice, I would stay private just because it's a lot easier. You don't have to spend money on marketing. It's an easier life as a company to be private. But I think for shareholders, whether they are going to sell or not, they just still want liquidity. They want the opportunity to be able to sell their shares. And we did have some shareholders that were not happy that we were private, but for the most part, people were patient. And yeah, so ultimately, being public is about access to capital, and that's number one reason.
Are the shareholders that had financed you privately, are they still with you, or the majority of them, or what's happened to those shares?
Well, I would say the strategic ones are still there, like the Crescat Capital are not only still there, in fact, they were one of the early investors in Silver47. They've re-upped in this last financing, so they're pushing that just under 10% mark post-financing. Eric Sprott is still there. Obviously, management continues to participate, and there are some other, I'd say, key retail guys that are continuing to participate as well. Now, having said that, though, if you look at our recent trading activity, so we became public in November 14th of 24, and we've traded about 23 million shares. And the company, up until this recent financing offering, only had 50 million, 50 out, and we traded 23 million shares. So I think there is some recycling going on, perhaps people selling and buying back into the financing. And I think when you're private for a period of time, you tend to build up this pent up selling.
Mhm.
I don't know what you want to call it, angst, or oh, I've been in this thing for, in our case, we started in 21, right? So we've had 21, 22 shareholders now, 2, 3 years later, being able to sell their shares. I think people just get a little maybe impatient and, oh, I get to sell my shares now. I've been holding on this thing for years. And, everybody that's invested in this space, I think, have some privates that they're stuck in, and it's hard to sell your shares as a private, again, providing that liquidity. So I think if we've done anything right here, is we've been successful in been able to absorb the 23 million shares in the market and still upholding a reasonable share price here at this level.
Mm.
While I think it's undervalued, I think it's held up its value.
Do you have a share registry building strategy, if that makes sense? Like, do you think about, oh, I want to attract this type of individual, or I want to have 70% institutions, or whatever that might be? Is that something you think about, and how do you think about it if you do?
Yeah, absolutely. I think, there's a balance, right? You need retail for sure. You need a good amount of retail. So in an ideal world, it would sort of be probably a 50-50 strategic institutional and 50% retail. That's sort of my gut tells me, because you need that liquidity. If it's a long hold institution, well, they're not trading it, so you're not getting that liquidity. So I think in any name, you need liquidity that's as a public company. That's one of the knocks against a lot of juniors is, you get in, it's a Hotel California, you get in, but you can never leave. So you get stuck in these things, and I think you want that ability to leave, and I think whether you do it or not, that's up to you. But I think having the liquidity is attractive for a junior company, and at least we've done that right. We've been generating a lot of buying and trading in the name. So ideally, yeah, I think you want those institutional names, and what I've learned is that being a sub 100 million market cap is a great opportunity for investors to get in, but as a company, it's a tough place to be because you don't get the bigger institutions can't go down below 100 million cap for lots of reasons, and so you want to get to that 200, 300 million market cap is sort of the sweet spot as a junior, because then you can get picked up into the index. If you look at like the SLV and the larger silver indexes, they're not going to buy a 60 million market cap company. They're going to be looking at in that 200 to 300 million before the index can put you in there. So yeah, I think the name of the game for our business is to scale up, and that's you asked me how do I get there? Well, you can drill your way to discovery and excitement and grow the resource. The other way is through M&A. So those are two ways to grow in this business, and it's M&A and it's drilling.
What is it that you're potentially hinting at there with M&A? Would you be on the A part of that equation? Like, would you be the acquiree or the acquirer? I don't even know if those are words, but would you be looking to buy assets, or would you be trying to merge with someone?
Yes, and yes, and yes, and yes,
Hmm.
all of the above.
Hmm.
So again, trying to keep the blinders off. So we have other assets that we could monetize and perhaps sell. We're always looking at opportunities that we could add value. Again, picking up assets at a reasonably low cost that we can do some work on and add value for shareholders. That's primarily the quickest, I think, a way to add value. But M&A with other companies, whether we're acquiring somebody or we're being acquired, those are all on the table. Why? Because we need to get to scale. We need to get to scale soon, and that's going to attract bigger capital, bigger funds. It's just the name of the game in this business is scale. Bigger scale is easier access to capital. That's really the name of the game. And while we're pretty happy with the amount of interest we got in this, we started off at 3, now we're at $11 million financing. That's pretty exciting. But we really need to be moving up to scale
Hmm.
ultimately.
So is part of the money that you just raised, is that something you think you're going to be using for M&A yourself, or is that really just earmarked for drilling?
Well, we haven't officially got through a board level discussion on the budget, and that'll happen very soon. But just high level, um, I think a lot of those funds are going to be earmarked for drilling because that's how we raise the funds. We raise the funds for advancing the Red Mountain, and we have visibility on growing the 2 resource zones we have. So my goal for the company, for just what we have today, there's lots of stuff we could talk about what we'd like to do in the future, but just what we have in front of us right now is we have this resource that we believe we can grow. So what do we need to do to grow it? And that's just amount of drilling. And then my goal is to come out in hopefully early 2026 with a new and revised resource
Hmm.
that shows resource growth. And if we can do that again in 27, year over year resource growth, then there's a path for, towards a PEA and into a development scenario at Red Mountain. So that I think that project has a pretty good path for development and near-term development. And of course, we think there's tons of new discovery opportunity there. That's why we're interested in it, because it's a 60-kilometer long VMS SEDEX environment trend that we basically have 100% control over a whole district that is really focused on these 2 zones because they're the most advanced, but there's lots of new ones. So the plan is to drill that out and again push it to a PEA and advanced stage towards a mine scenario. But then there's lots of other things that we can do along the way, and um, trying to find the best opportunity where you can put your capital. And hey, look at if we come across something between now and the end of the year that blows us away, there's nothing saying that we can't shift gears. And you're always trying to allocate your capital to where you have the best bang for your buck. So while we have, where now we have a focus in hand, we need to keep dynamic. We're a junior company here, and we need to be dynamic and kind of forward thinking. If, like I say, if we found something really exciting that blows us away, then maybe we shift gears and add something in, or there's some M&A. Looking at the list of silver names, if you pull up a list of silver names, you probably have a few on top of your mind. Um, there's always opportunities, but I find it's easy to talk about M&A, but that they're a little bit tougher to do, just because, my pile is better than your pile. Then you got management, perhaps ego clashings and those sorts of things. So if you can get past those and get alignment on, an objective like ours, which is get to scale sooner, then I think there's could be some unique opportunities there to get bigger.
It sounds to me like you're talking out of experience and potentially even recent experience, but that might be an interview for another time. But oftentimes there is ego clashing in this world. It's something that I've been paying attention to as well. Gary, what's the type of, or what is the profile of the asset or the profile of the company that you would be looking to merge with, though? Because you're not, well, you're hinting at some stuff there, but I'm trying to figure out what do you really want to do from an M&A perspective here?
Well, I think the ultimate goal, and if you look at the landscape right now, how many billion ounce silver companies are out there? Like juniors and explore codes. Like show me a company that has 1 billion ounces on the books. I mean, I could think of a couple, like Silver Corp has, I think, about 1 billion ounces maybe on a silver equivalent basis. So there's not too many in that category. Um, so that would be my dream sheet of a silver company would be to combine, and I half jokingly say that we could combine half of the junior companies out there in the silver space right now, and you'd still be too small,
Mhm.
right? So ideal world is we're talking. I mean, right now, I think the primary place to be exploring and developing a mine is the U.S.
Mhm.
Why? Because look at what's happening under the new Trump administration. He's constantly putting in these executive orders and pushing mine development rapidly through this what used to be a ridiculous bottleneck of permitting and just time delays on getting these projects built. So right now, if you want to fast track a mine, it's in the U.S. is number one on my list. So that's a big place, still a big place to operate, and there's lots of opportunities in the U.S. Would I look at Latin America? For sure. Mexico, I guess perhaps I'm a little gun shy on Mexico just because of the rhetoric coming out of there. And I've talked to guys that operate there that seem to be fine with it. But when you hear the president of Mexico talking about nationalization and banning open pit mining, and those aren't conducive to attracting new capital. So capital is like water, isn't it? Money wants a path of least resistance. So take that path of least resistance for the capital and go to work.
Hmm. It, when you talk about silver and billion ounces, and then you mentioned it's silver equivalent, that's the case for Red Mountain as well. What percentage of the mineralization there is actually silver? Because it's lead, zinc, and everything else, right?
Yeah.
So it's hard to find pure silver deposits, right? So the thing you'd be looking for would be a silver equivalent basis. What's that? What's the case for Red Mountain right now?
Yeah, so you're right on that. It is hard to find primary silver deposits. And if you look at where most of the silver comes from, it's dominantly lead zinc mines. Some of the largest silver mines in the world are actually lead zinc mines. So that's why we're largely looking at these lead zinc mines because they have a lot of silver in them. And look at our portfolio, they're largely lead zinc dominant, SEDEX, VMS, and Mississippi Valley type. that are dominantly lead zinc. But I mean, look at an example of the silver match showing where we had a pretty remarkable. I mean, if you look at that one hole was 7.8 meters, had 1,500 grams silver, but it also had 50% lead zinc.
Mhm.
So you could argue that that's actually a lead zinc deposit with crazy silver numbers on it. So that's kind of why we're focusing on that right now. If just to go back to your question on Red Mountain, currently the existing resource right now is 15.6 million tons. Half of that is zinc. It's about 33% silver and gold combined. Now, having said that, though, based on the work that we did, the handful of holes that we drilled in 2024, we've shown that not only because we're getting really good core recovery with the A-team drillers, we've shown that not only have our zones thickness improved, that the grades improved where we hit 15 grams of gold. We were basically sitting between two holes are about 100 meters apart. One had 5 grams. I think the other one had maybe 7 grams or 8 grams of gold, and we hit 15 grams of gold. So we got better recovery, better precious metals than the historical, especially the 80s vintage drilling. And so the point of that discussion is we think we can improve on that 33% precious to base metal ratio. The goal is to get that up towards what's, I think, more perhaps normal in these kinds of systems is perhaps up towards 50%, which is one of the objectives we hope to get this year by doing more drilling in around the known resource areas.
Right. I do want to talk a little bit more specifically about the asset. Just before we get into it, though, on the money side, the financing that you closed is interesting to me as well because it was supposed to be $3 million and now it's 4 times as much money. And I understand you're seeing more demand and you see that as a positive. But if you thought you could get the job done with 3, why go for the additional dilution here?
Well, we didn't actually thought we'd get the job done with 3. We came out with 3 because my goal as the CEO of the company is to raise money, ideally, because we're right now, Red Mountain is a seasonal operation and there is potential to drill actually all year round on some of the targets. But so we're hoping to have the funds in the door before the end of the calendar year. The market just wasn't there. And right now what we're seeing are these windows of financeability or financing opportunities. So we went out to raise some funds. I always had in my mind $5 to $10 million raise would be the number that we needed to have a good season. And part of the challenge is there because we're raising money in Canada and we're actually spending it in the U.S. We've got like a 1.45 or something today exchange rate, which is a little bit of kick in the knackers. But so we went out, to raise 3 because we didn't really know. To be fair and honest, we didn't really know where the money was and where the appetite. We didn't have $5 million in orders when we went out to launch this thing. We had about $1.5 million of interest when we were talking to some of our shareholders and soft circling interest. Is there interest? And then so we announced the 3, just reluctance in, we don't want to be overly confident. The book in the first week, grew rapidly to a point where we had to announce an upsize. So we did that. And then of course the book continued to grow because there was a bit of a momentum in silver over the last month or so. We've seen a lot of interest in silver and silver names, and the stock kept moving. And we had announced a 50-cent financing, and we're trading at 72. So there's lots of interest in it. Obviously, it's massively discounted to the share price. But the share price has been a bit volatile, right? It went up to 72 and back down to 60. And we thought, oh, but the interest was still there. So then we thought, well, let's see if we can upsize it another leg. So because we had a lot more interest than the 8 that we were allowed to close on, which we had announced the upsize. So we're kind of in the middle of that right now as we speak. Will we get to the full 11? I don't know sitting here right now. I know that orders are coming in and interest is building. But if we could get to that sort of 10 million mark, which is kind of what we thought we would like to raise in the start of the year, then that's, I think, a good place to be and kind of meets what we wanted to do in the first place, but didn't quite know how we're going to get there.
Mm. And you haven't, as you mentioned, you haven't published an official budget for it. Can you give me a rough breakdown, maybe, of how much of the money is going to go toward drilling versus G&A, marketing, just kind of a rough lay of the land, if you will?
Yeah, so let's just use a $10 million ticket
Sure.
as just a round number. I mean, I don't know where it's going to land yet, but so if I look at a $10 million ticket, I would probably take 70% of that and put that in the ground. Um, a piece of that into marketing. While we need to do some marketing, my experience is you could spend a lot of money on marketing. It's really hard to quantify. But if you drill some amazing drill holes and have a strong resource growth, that's gonna that's gonna override whatever you would put on marketing. But you do need to get out there and tell the story. So we do need to have some marketing budget. So a good chunk of that. I mean, and the other thing is, um, so if of the 10, you're spending seven, maybe it's a half a million on marketing throughout a year, which, is, I don't know, what's that, 20, 30 grand a month or something?
Yeah.
So on the road marketing, telling the story. And the other thing is leaving some money in the till at the end of the year, like unallocated capital is really important. So what the last thing you want to do is to go into your next financing with $0 in the till, and people know that. So I think having some funds unallocated, just as a cushion, if you will, going into the new year, I think is important. Just you may ultimately use that for drilling in the next year, but yeah, I just think having some money in the kitty, you don't want to blow all your dough in one year.
Hmm. But that means you're not going to be out there raising any more money in 2025.
Yeah, I think if we close this up as anticipated, we'll be fully funded for 2025.
Right. Okay. If you get up to that 10 million bucks, and you said you want to spend, what are you thinking about marketing? I mean, do you have, I see that you're posting a lot on Twitter, but do you have a specific strategy? Or are you going to be hiring new IR personnel? Do you go to conferences? What do you want to do for marketing?
Yeah, we do pretty selective conference. We've been hitting the Metals Investors Forum quite a bit. They've been quite encouraging. Standing room only. It's been actually a lot of new retail. It seems to be um, coming into the space, learning about opportunities. I think we just announced we have the OTC QB ticker in the U.S. AAGAF. And getting it because we have our flagship is an Alaskan asset. So I think we just got that ticker recently. So getting into the US and marketing again, perhaps more retail side, just classic roadshow one-on-ones, maybe some mini conferences, but just a lot of one-on-ones going to places that people never heard of the story before, and getting out there. Certainly some digital marketing. I think is, stuff like we're doing here. I think, you know, there's lots of opportunities to spend marketing dollars. And like I say, you could spend millions of dollars on marketing. It's really hard to quantify marketing dollars, I find. Um, but so just getting out there and getting that awareness, probably, I don't think right now we haven't designed our full year of marketing yet, and we have to get through this budget planning, and I think we'll certainly give some more thought to that, but perhaps some European road shows. But I would say right now it's kind of like get into the US and do some more marketing, just because now we got that US ticker. It's probably going to get a good chunk of that actual, real-time marketing dollars. And yeah, and some conferences, pretty select conferences, but there's a few, right? The myths have been good. The VRIX in January, the roundups, Core Shack. I mean, we had Core at Core Shack last roundup. So if you can get a chance to display some of the high grade core, and of course PDAC is a big one. We didn't get into PDAC for the core shack this year, but certainly we'll submit um, perhaps some of our new drilling results and core. You got to submit in and you make an application into it. So if you can ever get into the Roundup and or PDAC core shack, those are good places to go because people like to see the rocks and see what you actually have been drilling and stuff like that.
Hmm. How much drilling does the hypothetical $7 million here buy you? Essentially, what I'm asking about is drilling costs. How expensive is it to drill up there?
Yeah, well, that's a good question. And, we're not, to be fair, right sitting here right now, we just have an estimate. So I'm hoping that we could get, 7,000 meters, maybe 8,000 meters of it. Um, yeah, there's some things that we're working on as far as like trail and access, getting supplies and equipment in through sort of a winter trail.
Mhm.
Um,
So it's a
we're
thousand
getting
bucks
late.
a meter that you've drilled at so far. I mean, when you were private, what were you paying on a per meter basis?
Yeah, it was quite high. It was north of $1,000 a meter.
Okay.
But we ended up staying at this lodge. It was called the Wind River Lodge, which is actually quite a ways further south. It's a well-established lodge, so we didn't have to do anything. We just showed up. Again, that was sort of last minute, beginning of the season there. We just got it sorted out, but we spent too much on helicopters there. So we're looking at opportunities that we can drive down our op costs, and that is using that winter trail I mentioned that would allow us to bring in supplies into the camp, fuel and supplies that what otherwise you'd have to fly in. So
Mhm.
we do have a couple airstrips. One is this Wind River Lodge that we stayed at. So that's the fallback, which is more expensive option. But there is one that's actually closer to the resource areas. The challenge of that one is we don't actually own it. So we have to work with a third party on that one. We are looking to, in the short term, to perhaps permit our own airstrip and
Mm.
whether we use this other trail that somebody else has a permit on or we permit our own, which ultimately would allow us to winter trail materials and supplies in on the off season. Now, having said that, while we haven't done it yet, we haven't permitted yet, there is an opportunity to drill the West Tundra Flats Zone, which is one of the two resource areas, all winter.
Mm.
And the reason I say that is because it's literally West Tundra Flats is literally a flat spot, and that's a potential site for a new airstrip and camp, a winter camp that we could be right there. Again, you basically reduce your air support costs. So there's lots of things we can do, and we're gonna continue to drive down our costs in the short term.
So when do you think you're going to be able to drill then in that case?
Yeah, we're anticipating we should be in there in May, perhaps drilling by the end of May is the goal.
Okay, so then you're going to have news into kind of the first week, the second week of May, June, July.
I would think we should have initial results if we're in there in May drilling. I mean, we're drilling a lot of these are short, shallow holes, so
Hmm.
those can get turned around pretty quick. You could be drilled and logged and sent out in a week. Um, on these short holes. So, and then, what we're seeing, we haven't quite seen the labs get back to the pre-COVID turnarounds yet. We're still talking, I mean, pre-COVID, we're getting assays turned around in 3 weeks. We're sort of 4 to 5 to 6 weeks last year. So let's hope that they start moving closer to that 3 to 4 weeks again. Um, so we could see results, yeah, maybe towards the end of June.
Okay. And then from the perspective of permits, this is, as far as I understand it, it's not BLM land. But what about local populations and natives? Have you consulted everybody? Any baseline environmental studies or anything else that you've had to do?
Yeah, so we're on state managed lands. The state of Alaska is very pro exploration and pro mining. So we have strong support from the state. There's some permitting things we need to do, and it's more like the next leg of permitting. So they're coming up with these 10-year permit plans now. So we're working on that next permit will go in probably next year on the longer term plan for us. But right now we're fully permitted for what we need to do, and we have strong support from the state. Interestingly, here there are no First Nations interests here, so we just have to deal with the state of Alaska again, which has been refreshingly pro, and then obviously with the Trump administration, that's even more support for development of these kinds of projects.
Mhm. What is the in terms of infill or step out, what is going to be the focus here? Is it going to be, because I understand you want to have by early 2026, as you said you want to have an updated MRE. Would that come from more infill, or do you want to do more step outs?
Yeah, so the resource that we published was an inferred resource. So there's lots of gaps. If you look at some of the spacing, there's still big gaps. I mean, one appealing thing of these VMS type deposits is that, and I use the West Tundra Flats zone, you've got a mineralized horizon that is quite continuous for a reasonable, pretty good distance. But the spacing of the drilling that's been done in some cases, 400 meters, maybe 500-meter spacing, that's too much. So I think just infilling some of those wide gaps and bringing that tighter in, that's sort of on the list. I would say infill and and then expansion around the resource. So it's going to be a combination. What those numbers are, don't have off the top of my head because we haven't actually worked through the official budget that we can work with and how many holes that we're going to get and where they're going to go. But just from a broad stroke perspective, there's lots of room to infill. Like there's a couple of in both the resources in West Tundra Flats and Dry Creek, both of them seem to have this bit of a donut hole.
Mhm.
And there's a donut hole because the drilling we don't think did it justice. It didn't get into the resource. I think they at least on one of them, or in fact maybe both of them, they didn't get good core recovery. So they had some problems with the core recovery, so they didn't get it. Basically didn't hit the zone. And we think that there was some drilling problems there, whether they hit a fault or something, we don't exactly know. But so there's some more drilling to do around those. And if we can bring that or get rid of that donut and actually get uh, resource back into that'll make a difference for us. So just stuff like that that will infill. Like a good example is that hole 106 that I mentioned that we're drilling in between, you know, infill hole from a previous 5 or 6 grams, and we hit 15 grams gold. Well, that's great. So, you know, we want it, that's still wide open down plunge of that hole, and that was fairly shallow. So stuff like that, we want to march down plunge to again, and that's going to help improve and increase our precious to base metal ratio, stuff like that. Now, having said all that, I do want to have some portion of our budget, and we'll have to think through what that number is, but just around maybe 10 or 15% of our drilling budget this year should be testing new targets, and we have a couple in mind that haven't seen any drilling yet. So we want to at least go and test a couple of new targets for that new discovery opportunity. So I think because of the property has a lot of showings that have not been drilled, we got to go out and test some of these. Because if you could add another Dry Creek or West Tundra zone, it just helps helps with that resource growth ultimately.
And I hope we can do a separate conversation when we're really talking about the rocks and the geology and where you see everything coming from and going structural controls and everything on top of that. But I know you don't have all day here, and that's a conversation that could easily be an hour and a half in and of itself. What is interesting to me though is that I just opened up your website again, and you're talking about an exploration target that is 50 to 75 million tons. You're targeting a 300 to 400 grams per ton silver equivalent. That is, those are that. I mean, that's an ambitious target. That's 500 million ounces of silver equivalent that you're talking about here. Where is that coming from? How do you support that, having so little data on the project so far?
Well, I wouldn't say we don't have little data. We actually have 39,000 meters of drilling, you know, almost 20,000 or more. So let me pull that number up here. I think we have something like, um, 16,000 XRF soil samples, 2,500 rock samples, almost 8,000 soil samples. So there's been a lot of work on target generation. Most of the drilling has been focused on those two resource areas. So right now we have 15.6 million tons. Um, Now, if you recall, I mentioned when we first acquired this thing, we had a JORC resource. So the JORC resource was unconstrained. It came in at 270 million silver equivalent ounces. When we put out the 40 NI 43-101, we had 170. So we lost 100 million ounces of silver equivalent. Um, so where's that delta between the JORC and the 43-101? And that's what we're looking at to grow back to. So we've got a good base here. We want to get back to that. So if we could, get back to that 270, call it 300 million silver equivalent round numbers. Um, and then expanding from there, we can see if you do some projections, 45 million tons is a triple from where we are right now. So again, if we could find another one of these West Tundras and Dry Creek, you can start to put together these kind of volumes in reasonably short order. So that's sort of our base case is that 50 million tons. We don't think we need to get that far. We think if we could probably get to 30 million tons, you probably have something to build here. And that's just, back of the envelope, and we can get into the weeds on that perhaps in another call. But
Well, that would be my follow-up question actually is how far do you think you have to get it for you to have that value realization, albeit building or selling, with me assuming that the latter is your preference here, but how much more drilling before you can actually get there? And I understand that would be a good feeling, kind of a guess here, but yeah, what do you think?
yeah, well, what's interesting is if you look at the, mineability opportunities. So if you look at a 2,500 ton a day mine operation, which could be combined open pit and underground, that's only 18 million tons. So we're actually not that far off from the 15.6. Adding a few more million tons there gets us to a potential 2,500 ton a day operation. And then if you say, well, that's actually kind of low, you want to scale up to sort of double that to 5,000 ton operation. And that's where you kind of look to that, 36 million tons. Like I said, if you're getting to that, doubling the current resource of 30 plus million tons, now you're talking a potential 2,500 to 5,000 ton operation. Obviously, getting to 10,000, you need to add another. Again, that gets us to that 50 million ton sort of pie in the sky, if you will, or at least exploration target. So we need to have expand our resources substantially, but also that's why it's important to do that exploration to identify another zone like Dry Creek or West Tundra in close proximity to the current resource. And we think just given that number of showings that exists, there's a high probability that we can generate another zone that will add to this sort of resource story and sort of get to that I guess PEA level development. So we've got some work to do to get there. Obviously, we're not there today, but that's work we have in front of us that it's not total pie in the sky. There's rationale for it. These things are there's a the West Tundra and the Dry Creek zones sit in the same formation that are 2.7 kilometers apart. So what's in between that? If we could perhaps connect the dots somewhat even between those two zones, there's a lot of material there that could add into it. And but that hasn't been tested, but that's certainly a question on our minds.
So how much drilling do you think it's going to take? What I'm really trying to get at here is how much more money do you have to spend before that value creation event? Essentially, that's where I'm coming from.
Yeah, that's a good question. And, we don't have, I guess there's no magic bullet here, but I'm just looking at, so if you look at all the drilling that's been done today, 39,000 meters. So you think, well, it's probably going to take another 20,000 to 30,000 meters, so double that, perhaps. So that's another 30,000 plus meters. So another perhaps 20, $30 million is probably the ticket.
Mm-hmm.
I think that we should be looking at to get to a point where we're talking PEA. That's sort of my guess. I mean, it's not it's not free drilling. You got to get out there and drill it. But um, I think the discovery rate is quite high here, based on some of the work that we've done. And again, clawing back that JORC to 43101 delta, I think is going to be important. But first steps, let's get this season of drilling behind us. Let's see what our new resource comes in at. That might be a bit of a benchmark to, can we reproduce that or grow it even further in the next leg of drilling? So time will tell, and I think, yeah, we see lots of opportunity in front of us, and this is a good base case for us, so we're pretty happy with where we are.
What I'm getting from you so far, Gary, is that you don't think size is going to be a problem. I wish I was that lucky in my personal life too, but that's a conversation for another time. Do you think grade would be sufficient, though? You're talking about 300 to 400 silver equivalent. We've not talked about recoveries. We've not talked about payables to the different concentrates that will end up coming out of the polymetallic deposit here. But would that be sufficient grade to warrant building a whole operation in Alaska, in the context of topography as well as location?
Yeah, I think so. I think these are pretty good grades. We're confident that the baseline grades will improve, but I think in this, 300 gram plus material, um, not to mention the other critical minerals that are involved in here that we haven't added to that. But just sticking with what we know, um, yeah, I think so. I think we've got, in Alaska, while we do have some infrastructure build to do. There's the acronym is ADA, but it's the Alaska Industrial Development Export Authority. So ADA will provide funding for infrastructure. That's, for profit. That's what they do. So while there's some infrastructure work to be done when we're ready to build this thing, we have a kind of a funding arm, if you will, there that will help support that. So yeah, and look, I think we've got to get through that. I mean, my rough numbers, if we can get to those numbers I mentioned, I think we'll be in decent shape.
Mhm. Are you going to be doing any met work this year?
Yeah, I mean, that's something we're going to talk about. I think there should be some more. I think we need to do a bit more each year. I don't know what that means and what that looks like, but it's reasonably small budgetary number. But I think we do, if you look at our recoveries that we do have, they're in that 70 to 90% range for the metals that we're talking in the resource. So we want to do more work on that because it's been a while since that work was done. So get perhaps some new techniques involved in see if we can get better recovery and perhaps understand a bit better where the silver and where the gold is going to report. Is it going to be is it a copper concentrate? Is it a zinc concentrate? Is it a lead concentrate?
Right.
Those things we need to work through. And then the other part of that recovery is we announced recently that pretty substantial and consistent amount of antimony. And obviously antimony is a critical mineral. It's one of the minerals that China dominates, and it's becoming a strategic metal for the U.S. So we're trying to understand what kind of recoveries might we see from antimony on this project. That may add significant value. Right now, it's not being counted in our silver equivalent estimates, but I think if we can get some metallurgical work done and understand that, perhaps that might be a little added bonus, perhaps to the credit. So some more work to be done on that for sure.
Yeah, well, well, metallurgy, of course, one of the most important things when it comes down to stuff like antimony. So that's something that I did want to talk about, but I know you have to run here, Gary. So we'll follow it up shortly, hopefully. Here, what am I forgetting to ask you though? Here at the end, something that you came here hoping to talk about that I failed to bring up.
Um, yeah, I mean, look, I know we short on time here, but I think just to summarize the opportunity, we have a flagship asset in South Central Alaska. It has a substantial resource of 15.6 million tons. It's coming in at 336 grams per ton silver equivalent. Gives us 168.6 million ounces of silver equivalent. Again, it's 33% combined precious metals to base metals. and we're going to try and improve that ratio. We have, while we haven't closed on our financing, we're likely fully funded for the 2025 season. And yeah, I think that's it. I think for more information, viewers can look at silver47.ca and have a look at the tech report is on the website, and happy to chat more detail next time.
And that's been Gary Thompson of Silver47 AGA on the TSXV. Gary, thank you so much for your time.
Thank you. Appreciate it.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know, and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias, and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company-specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should under no circumstances be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing, and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. Also, unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."